This is the briefing for Friday, March 10th. Well, certainly was a very interesting day today with two news events that occurred. One was the employment numbers that were better than expected at 8:30 this morning, and then later in the day, the news about the Silicon Valley Bank shutting down. So that led the market to have a pretty decent sell-off in today's trading. Now, in yesterday's trading, or yesterday's briefing, I should say, I talked about the fact that the that we were at a point of being almost extremely oversold. And let me get that up here. So you can see this. This was yesterday's right here where the indicator ended in the NYSE, and this is where it ended in the Nasdaq. But based on that, it suggested to me that there is potentially some type of rotation back to the upside. Now, when we opened, you can see this is the opening bar, this is 30-minute candles, and you can see right here there was a divergence in breadth, and I suggested that if there was a divergence in breadth on a lower low, then expect some type of countertrend rotation, and we got exactly that in the spiders, and you can see they came right back up and tested this 393 level, and then of course started another sell-off to the downside. Now it's interesting because volume was pretty strong at the open, and then as it tried to retrace back up and tested this breakout point, volumes fell off, as you can see, and then of course as we started to go into the close, they tried to rally it but then failed on that, and volume increased as well. The same thing occurred in the Nasdaq. Nasdaq broke through the 290 level, came back and retested that, and then of course started another sell-off going into the close. You can see breadth opened fairly stronger. It increased, which it appeared that we were going to see potentially a breakthrough resistance here at 393, and then potentially rotation back through this range. Then the news hit, and we had breadth that was increasing before the news hit, and then the news hit about SBV Bank, and then of course we saw this rotation back to the downside, and breadth got to a pretty negative situation at the end of the day. And this was pretty much an extreme in the Nasdaq, not so much in the spiders. So that led us to a point now of where we are at an extreme oversold condition. So that suggests, as it did last night, we were just at this point here, that we're going to see potentially some type of rotation back to the upside, unless there is additional bad news that comes out over the weekend that we're not anticipating, and we see a continuation of the move to the downside. Now we know that markets run and pause in all degrees of time. So even as this was a run, we got a small pause here, another run, a pause here, a run, and a pause. So it's not like we get a complete washout. Now, if that were to occur and the market were to crash, that certainly is possible, and we can stay overbought or oversold for a long time. So, but a majority of the time, it would suggest that we're going to see some type of pause or some type of counter trend rotation to work off the oversold condition. Now, where we are in terms of this 392, 393 level, we've broken through that in the spiders. The next level of support comes in right around 375, which is this low right through here, this area of balance right through there. If that is broken, then the October lows are going to get tested. And if the October lows are tested, I would venture to say they'll likely get taken out. Now, going all the way back to this October low, I said back then that I did not feel the low was in, mainly because this was not capitulation. This was just buying that stepped back in, and we got this counter trend move back up to here, and we had a three-step counter trend move, as I've been discussing in the briefings. And then of course now it appears that we're in the process of another leg back to the downside. What's going to be important in the spiders is this 375 level. Now in the Nasdaq it's 280, and you can see that we had this pause here, then a pause just under this 300 level, and now a potential break. Now this low is important. This low right around 288, is extremely important because that's about where we closed in today's trading. That needs to get taken out. If that's taken out, the next level of support comes in at 280, and then below that it's going to come in right around the 260 level, which is this low through here, and then below that is going to be the October lows in the NASDAQ. The Russell was really showing more strength than the other indices. You can see the rotation above 190, rotation at and around 190, and then of course we got a pretty significant sell-off breaking through this 178 level and closing really around the 175 level. Next level of support comes in at 170, and then below that is the October lows in the Russell. Now you can see in all of them, today's volume was just really very strong. So I would expect that we'll see a continuation of selling in next week's trading. But what's most important is what happens with bread. Now, I've got several phone calls in today's trading. People wanting to know if we were going to see some type of a crash. I don't know if we're going to see a crash. I think that depends on the news events that occur. There's a Fed meeting. I think it's March 22nd. Depending on how much they raise interest rates, it's going to be important to the market as a whole. But all we can do now is we've broken through short-term support levels, as you can see here. So the next thing we have to do is go up a degree and look at where we are in terms of the next levels of support, anticipating that we're going to see runs and pauses, just like this. There's a run, pause, run, pause, run, pause. So I just want to be clear that because we're in an oversold condition, that the higher probability, and it may only be a 55 or 60% probability, there's no way to tell statistically, but this usually leads to some type of a pause. Now, it doesn't have to be a pause. Remember, in trading, we just assess the probabilities of one event occurring over another, and that is the market going up or is the market going down? So based on that, my probability assessment is that just from the information the market's given me in my charts, that we could see some type of a pause, but there's a lower probability that we could see a continuation and an acceleration of a move to the downside. Keep in mind where resistance levels are. Those are extremely important. Trading back above those would suggest that we are not headed back down to test the October lows, and that we potentially are in just another stalled period where we've been for probably the last 5 to 6 weeks of trading, finally breaking out in yesterday and today's trading. One thing to keep in mind, as I said at the beginning of this briefing, is watch for a lower low on Monday, and if breadth is stronger than it was in today's trading, then that would suggest some type of pause or counter trend rotation, and you'll just want to keep that in mind. Then we can determine the degree of time and price of that counter trend rotation to see if it is counter trend and we're going back down again, or if we just reached a stopping point and we're rotating back to the upside. Watch breadth on Monday at the open. That's going to be the most important indicator that you can have. Have a great weekend, and I'll pick this back up on Monday. Should be a very interesting day on Monday.